Welcome back, and join me now as we take a closer look at the equity scene is Thamsanqa Netha from Shiloh Capital and Faheema Adia from Momentum Securities. Thank you so much for joining us live in studio. Pretty exciting times. I'm not sure though how exciting that budget was. Looking at the market's reaction, the JSE was largely flat. Even the Rand, not crazy movements today. Faheema, would you say that this is good?
Yeah, so I think, like you said, there wasn't anything particularly exciting, I would say, announced in the budget. A lot of it's already kind of been priced in, and nothing that really took the market by surprise. I think the only major announcement made was about that gold and foreign exchange contingency reserve account, and that we will be now tapping that for 150 billion rand to help draw down the debt. But I mean, apart from that, I think a lot of the other announcements were largely expected.
All right. I will be delving deeper into that a little bit later, but just your thoughts on the tone of the budget, seeming that the financial metrics weren't as bad as expected, Tammy.
It was not bad. It wasn't good, but it was not bad. I think the minister addressed what he felt was important. Nothing surprising outside of what Faheema just spoke about. I think the one surprise, was the addressing the 150 to address domestic debt. You'd think foreign debt is more expensive, more higher interest, but they've opted for domestic. So I think that was the only sort of thing that I looked at and thought maybe could have been done differently. But outside of that, if you're a sinner, you're paying more. The teachers and healthcare service providers have got bigger budget. So it's the same thing they've been doing over the last couple of years.
Yeah, I've been saying, I think, you know how people give up some stuff for Lent, alcohol, tobacco? I think they should make that permanent because it's about to get more painful.
And I see they're now taxing vapes as well.
Because of a suggestion from,
So he's reading suggestions.
Exactly. Well, a pretty nice way to bring that in, that it was a suggestion from a member of the public. Talking about, the allocation to teachers and healthcare workers, that, public sector wage bill, how do you think he navigated that? Because, I mean, that was quite a pertinent pillar of the budget that people were looking ahead of it.
Look, I think he's obviously in a very difficult position because on one hand, we do need to cut back on debt and there needs to be fiscal consolidation. But at the same time, we can't be cutting back on important critical services such as healthcare and education. So I think he navigated it obviously as best as he could, given the circumstances. But, we obviously do need to stick to the budgets and promises that we make. I mean, last year we said there wouldn't be increases for public sector workers, and then we had all these massive increases come through after the unions made demands. So, it's one thing having your budget, but it's another thing actually sticking to that in the long term.
Well, actually, Tammy, just looking at this budget, because we have been talking about fiscal consolidation for a while. Some people coming in and saying that that's been slow. Some saying, you know what, when Treasury needs to cut, they cut. How do you think we've fared in that effort so far?
I think the Treasury is great at revenue collection. They're also great at allocation. But as the minister pointed out, the bang for buck is where the problem comes in. So how efficiently do they use the capital that they allocate to every part of the government? And I think that's what needs to come into question. There's loads of capital that's given or money that's given to the right sectors and has been for a long time, but its usage and its impact and the feedback measurement on how 1 rand spent on healthcare or on education or on social services has impacted the economy positively. And I think that's where the hard work needs to come in. The allocations are fair. We can't be a developing nation not focusing on our health and our education and our social services. But when you spend that money, how do you spend it? And what returns, how your social returns or your impact returns is where we are lacking quite significantly.
Faheema, you spoke about that GFECRA, that foreign exchange contingency account. So most of it will be going to debt, or all of it. What's the situation here? And also, Tammy's talking about efficiency. How can we trust that this spending will actually be efficient and that they won't be tapping it for more than they should?
Yes, so the thing with this, this account is they've got about 500 billion rand in reserves in there. And that's basically accumulated because we've got an increase in the gold price, the rand has depreciated, and of that they want to access 150 billion rand, okay? So they are leaving some money there as a buffer. You do need that buffer there in case, you know, the rand strengthens or gold weakens, so that we maintain our international credibility. But I mean, this is obviously not a long-term fix. You know, we need to correct the fundamental issues in the country.
Yeah.
We need to get our country onto a growth path and a growth trajectory. I mean, the minister said that we're looking at growth rates in 2024 to 2026 in excess of just 1%, which of course is not enough. You know, we need to see more growth. We need to see unemployment come down. We need to see our state-owned enterprises actually function correctly so that the economy can function. So yeah, definitely, I mean, it's sort of like a short-term mechanism to bring down the debt, but we're hopeful that this will just put us on a better debt trajectory while we correct those fundamental underlying issues.
Well, talking about growth, let's talk about the spending that does support economic growth. Of course, the spending, the effort in that is to make the doing business in South Africa easier and less costly. Of course, infrastructure, logistics, electricity. Did anything stand out for you there, Thami?
The infrastructure spend, I think that's an important one. I think as you can see in our own municipality, the kind of infrastructure challenges we have around water, I think that's a very, very important one to maintain and to grow infrastructure. It also has a very big impact on the economy, especially on employment. So I think it's a good move. However, the elephant in the room is still Eskom. It needs to be addressed. It needs to be addressed aggressively. The money has been provided. Then actions must be taken to get us to become more productive and energy efficient. There's a lot of money that's been allocated to green energy. It's pretty expensive as it is now, so let's hope that that money will go into the right places, make it more affordable, make the production costs more affordable for us, the consumer. Other than that, I think the growth path discussion is going to be very hard going forward, and whoever will be the president has got a challenge the next 5 years. They've got a lot to do, especially turning the country around, making sure we try and get close to a balanced budget, and then driving the infrastructure spend that will lead to more than 1%. Hopefully we go 3, 4, 5x that, because we need it.
There are two elephants in the room, a pink one and a blue one. Transnet being the other one. Was it a surprise that Treasury didn't give Transnet any new money?
So I think that this was definitely expected, and we still expect that it's something that will need to happen. But yeah, it's interesting to note they didn't really make any solid announcements about what money will be allocated to Transnet. What they did say, though, is that you know, they do have that roadmap from Transnet, and it's been approved by the cabinet. And it seems that they're just going to ensure that it's done in a systematic manner, just to ensure that, you know, there is accountability from Transnet's side in terms of reaching certain targets in terms of that roadmap. But I mean, at the end of the day, I think they do need to actually provide the funding to Transnet to allow it to operate, because it's obviously a key driver for the economy. We can't expect to see recovery in our economy, in our mining sector, in other manufacturing sectors, if we don't have you know, a railway system that works. In particular, once we see a turn in the commodity cycle, because we definitely don't want to be missing out on that in the next year or two. So I definitely think that's going to be a priority, and something they will have to set the budget aside for.
Of course, the minister did emphasize that 47 billion guarantee facility that was approved in December. But, you know, just this move that Treasury made of giving Transnet no new money, Thami, would you say that at this point, because of the headwinds that you know, companies are experiencing because of Transnet, maybe the love is too tough at this point?
No, for me, it's a hint towards privatization or some form of private sector intervention.
Yeah.
I think the government has looked at it and said, this is not something we can address any further or provide any capital to any further. So they probably must have some idea around a private sector solution. My hinting is if the state is not giving an SOE capital, it either wants it to shut down or to privatize.
Yeah.
And I think we can't have Transnet shutting down. So I think it's to introduce instruments that enable private capital to enter. Whether that's good or bad is a debate for another day, but I think him not providing that capital is an indication of that.
But I mean, with these, still short to medium term pains that companies are experiencing because of Transnet, I mean, we've had a number of miners now to say that their retrenchments looming. Even yesterday, we did have unemployment ticking up. Could things get worse before they get better, Faheema?
Yes, I definitely think so. Like you said, we've seen a number of mining companies release their results this week, give their trading updates. We had Amplats announce retrenchments, retrenching north of 3,500 workers. Also, Kumba has announced retrenchments, and so have a lot of other mining companies. And it's very concerning because, I mean, like you said, the fourth quarter unemployment rates also came out. That's also ticking higher. And I do think there's going to be a period of pain, until the situation with Transnet is resolved, until the situation with Eskom is resolved. Companies also at the end of the day, they don't want to retrench workers, but they need to have a business model that is profitable and is sustainable and competitive in the long term.
Yeah.
So I think until we see some real improvements in the situation with our SOEs, there is going to be more pain to come.
Yeah, talking about more pain, Sibanye experiencing more pain. I know, Tammy, I know this is one of your favorites.
It's my child.
Did you not get a dagger in your heart when you saw those numbers?
No, I think they've got a lot of work to do, especially around correcting their balance sheet. And I think they'll go about doing that. Acquisitions come at a cost, especially when they're part cash, part stock. So you've got to pay that price. So they've got to go through that period where they consolidate, they resolve balance sheet issues, they resolve operational issues because a lot of their assets are tailings and the rest. So I think they're a great business. They offer great diversity. They're just going through a period where the management has to prove to the market they can do the job. My view is they can. Clearly, there's a lot of other people who view that they can't. Yeah. So I think it's going to be choppy waters for them going forward for a few periods, but I think they'll get it right.
All right. Well, as much as we saw pressure on the commodity stocks across the board, Glencore seemed to get quite a knock in its share price, down 6% at some point. It also released results today. Also pressure on profits. Also the dividend was down. What did you make of these numbers, Faheema?
Yeah, so I think it was expected, just due to the lower commodity prices, especially I think a huge knock there came from coal, the decline in that coal price.
As we even saw with BHP.
Yeah, exactly. And I mean, Glencore, of course, is also being impacted by, Transnet, Eskom, the same as all these other mining companies. And, just, of course, because of the lower commodity cycles in general. We're kind of at the bottom of that cycle right now. So we are waiting, I think the mining companies in general, investors, we're just waiting for the turn in that cycle before we can start looking at those resource shares again.
A company that seems to be on the other side of the spectrum is Bidcorp. They just keep on churning out double-digit, growth in financial metrics. Do you think, Tammy, because also there's a worry of slowing down in the global economy, do you think that it's resilient against all of that?
I think they'll always do well.
Yeah.
They've managed their group of assets very, very well. They manage their operations well. They have a history of doing it. So I think they'll always do well. It's the rate at which they'll do well, which will always come into question.
Yeah.
But as a business, I think they're addressing key customer market, and it's difficult to not address how people eat. So I think it's a key element of the business. They address that market well. They manage how they engage with the rest of the economy. They are to some degree an index of how the economy could do. So it's a good management. They're addressing good sectors, and they are ensuring that they are up to par in their operations. And I think they'll do well for the foreseeable future.
All right. Well, let's get to your stock picks for today. Faheema, what are you picking today?
So my pick is Storage REIT. So we've seen quite a good recovery in the SA REIT sector in the last quarter of last year. That's obviously on the back of those pending interest rate cuts coming from the US and also South Africa, which means it'll just make it more affordable for property companies to pay off their debt and those interest costs. And if we look at storage, we really like it because of its focus on that niche commercial property storage, self-storage sector of the market. And it also has exposure to UK. So I think about 64% of their portfolio value lies in the UK. A lot of revenue is generated from there. And I think the good thing is it just takes some SA risk off the table in that it provides that offshore exposure. In terms of the valuation, I think it's trading at a pretty attractive dividend yield of about 8.5% now, and we're still seeing some further capital upside on this one. So that's my stock pick.
All right. Tammy, what are you hanging your hat on today?
Airbnb. I think they're great business, great cash flows. The results from the last quarter show they're a cash printing business. They've also shown it's a defensive stock, very recession-proof, to some degree even pandemic-proof, if we look at how they performed during COVID. And locally, they've come to some partnership with the City of Cape Town, which is quite helpful, to help with the remote working and the partnership with Home Affairs on remote working visas. So I think they're going to do well in the foreseeable future.
All right. Well, thank you so much for your time, lady and gent. I really, really appreciate your insights today. That was Faheema Adia from Momentum Securities and Thamsanqa Netha from Shiloh Capital, taking us through the day's markets action.